Welcome to Stoic Talk Season 2, presented in collaboration with DSP Mutual Fund. Today's guest for us is Shyam Sekhar. Shyam Sekhar is the ideator and founder of iThought Financial Consulting LLP. He's an active and renowned investor with a focus on value investing for the last 30 years. His focus as an investor has been on identifying investment opportunities in emerging companies through a sound research-driven process. He also built the first independent proprietary desk on equity research in Chennai. He's an advocate for investor awareness. He was president of Tamil Nadu Investors Association, TIA, from 2012 to 2015. He's an active speaker in public forums and is a regular columnist on Live Mint as well.
So, Shyam, great to have you here on Stoic Talks. Tell us something about your initial start in the markets, which we don't know about. We've read about you in the book. We've heard a lot about you everywhere else, but something which we don't know about.
See, when I completed my graduation, I had no choice but to join a family business, which was in manufacturing. And that didn't excite me that much at that point in time. So I wanted some escape for a few hours where your mind is not on that which you are not enjoying doing. In that search, I found my neighbor who was an avid investor, and I used to sit with him those few hours in the afternoons. And that's how I got introduced to equities, companies, and ownership of businesses. So it was completely accidental. I had no idea that this is going to be something I will like or this is something that suits me. None of it. I was trying to run away from something, and I just hid under a staircase, and that staircase was this.
Luckily, you ended up at a different place.
Yeah, when you hide under a staircase, someday you're going to climb that staircase.
So that neighbor was Mr. K. Sudarshan, as you mentioned.
Okay, Sudarshan. Yeah, correct.
Tell us something about him and how he probably initially influenced you and probably set the standard operating procedures for you.
See, generally you expect to learn from people who, give you very smart investment ideas of how you must make very breezy switches, very tactical calls, very effective techniques, and so many things. That's how modern investing is. But this was an old school person who believed in buying businesses and owning them and just reading the annual reports, enjoying the dividends, putting the dividends back into some other stocks, and not at all showing any worry or concern about what happens to other investors, what happens in the broader market, who is doing what. None of it. So he was basically a person with a very contented personality, and such a personality will have values which are also allied. So that was the uniqueness of him, and that was his uniqueness. And from that, I also learned that you should have your own ideas, good or bad, hit or miss. Work on your own to find your ideas. Don't look outside for anything. And he also freely shared knowledge. That is another aspect which I learned from him, and subsequently also from Mr. Goel. That is, they share knowledge very freely. They discuss very freely. If you notice, when we meet privately also, we discuss very freely. There is no Chinese wall or anything. Anyone can ask anything and we'll say what we think that comes to our mind. Of course, it doesn't suit a public discourse like a Twitter or some other spaces. But that was my learning, that you should be very free and frank and honest in what you speak. Because all those things helped, because learning phase, time is the essence. If somebody is holding back anything from you, you may lose years. You are learning something very fundamental and basic. Whereas when somebody gives without any condition, then the other person doesn't waste time. He goes to the next station of learning. So the journey keeps moving. So that was another aspect which I learned from him. That is why my learning was very accelerated over those 2 years between between June of 2020, between June of 1990 and May of 1992. So those 2 years were very, very breezy and accelerated, and a lot was happening in India. So we would constantly discuss what will happen, because there's intense criticism of everything that is happening in the country. No different from what you see today. But only thing is, it was done by highly educated people, scholars, academicians, and people who we usually respect were all getting that call wrong at that time. So for us, it was a call against them, actually, in a sense, where you understand what is happening. And so that contrarian thinking also was forced on us because of the circumstances and the relationship which you have with the person who is teaching you, both.
So post that 1990-92 period, how was the lull? How did you go through that, say 1994 to 97, 98, which was a relatively tougher period?
So 92 March, May, so 92 June to 93 April, I was not in the market, but I was very much in the investment world. So I did zero transactions for 9 months. Zero, nothing.
Any reasons for that?
I was studying. That's when I learned
Acha.
value investing. Yeah. I was in Bangalore doing a 1-year program in IIM Bangalore. I used the time to learn value investing in a structured way. 92, 93. It also helped me learn equity research. So the 9 months was a time when I learned, and again I came back in July of 1993.
It almost coincided with the top, right, of the markets back then.
No, only after the top I went to study. It's not a
Acha.
coincidence. So he felt that things are going to go bad. You go learn, and then don't sit here. So he basically asked me to go there rather than sit in the
Very
market.
interesting. So you basically sat out the entire IT boom.
No, 92, 93.
Oh, no, sorry, 1993. Yeah, yeah. Okay.
Post Harshad Mehta crisis. After the crash, I went out. After.
So in the book, you also mentioned that the Harshad stocks did not bother you much because you were not invested in them
I
anyways.
have never, in fact, I have never participated in any boom, boom which the market has fancied. None, zero. In my entire career, I have never participated. 92, 2000, 94, 2008, to 2022 also.
So in a way, your sabbatical that you took for the education was pretty well timed.
It was conscious. That's what I'm trying to tell you. It is not timed or anything.
Okay.
It was guided and conscious.
So what next after that? Say we again got a good time in 94.
When I came back, my friends from the past, again we reconnected. All my market friends, some of them. So we again started talking about the context and what is happening and all that. At the time, I was of the view that we should do equity research. We should not do anything else. But there was no equity research at that time in India. In 93, there was nothing actually. Definitely not in a city like Chennai. Maybe in Bombay, there were some FIs who had just come in, and you can't even talk to an analyst or somebody in the research field. Research field people were in ivory towers at that time. Now they are on the streets. But then they were in ivory towers, so you couldn't talk to anyone. So we did on our own with whatever we had. So we had to buy a capital line and all those things on your own we spent. So we started doing equity research on our own, writing a report, and then buying stocks based on that. Sharing those reports with a few investors who respected equity research. So that's how it started. Entirely proprietary driven. No clients, nothing.
Shyam, in the book, you mentioned that your first big hit was Ponds, which was later bought by Hindustan Unilever. And you had put a whooping 60% of your net worth in it.
Yes, correct.
Now, this is a common theme I've seen in many of India's success stories. My question is, do you really look back uh, and do the calculation of probably survivorship bias and scenario analysis? Maybe in parallel universe, what if that investment had failed?
No, I don't look back first. And second, at that point also, it was circumstantial. Somebody wanted to sell bonds and they wanted money immediately. And I had the money. It's like you see the classic situation of how very, very large investors and iconic investors buy big parcels in companies, right? So you have the money ready. That's the first principle. Somebody comes and wants to sell. That's the second one. And the third one, you are able to make your decision quickly. The fourth one, you don't let any procrastination and delays and other behavioral traits come in the way. So that's how you buy. So there is nothing to look back after that.
So I think you've done that multiple times. I remember the first time we met. This was many years back. That time it was sugar stocks, which you had lapped up from some institutions and a bunch of you investors. So how do you all decide and say, just for you, how do you decide in say, because when this happens, there is not a big time window to actually decide, I suppose, right? You cannot decide over months or days also. So is it more instinctive based, or you start working a lot more on that idea?
No, in your mind, some ideas are running. At any point in time. Like today, you will have 8, 10 ideas running in your mind. You always have space for some more ideas to enter also. So when somebody like we discuss and you tell me something, have a look. And when I see it sometime it hits you. It's like a flavor only, right? So then you again go deeper into it. So it's very instinctive and very natural and very progressive. It is not something which is conscious. And you keep on doing this all the time. So you do it for 10 years, 20 years, 30 years. Afterwards, what happens is your familiarity with situations starts helping you in some way. So, but in the early days, it used to be a lot of instinctive and then hardworking follow up, combining to make a decision. That's how it is.
Yeah, Prashant, my question was around the sizing of the position. Like, let's say if the same situation were to occur now, you're not going to put 60% of your net worth in one bet, right?
No, because circumstances, 60% is not an option. But
Right.
I do have stocks which go up to 25-30% progressively in cycles. And then I
So,
use it
o-
to fund
okay,
other.
so would it be fair to phrase it like this? Because initially, once a person is starting off, it's okay to go concentrated.
Correct. It's
Right.
okay if you know how to handle it. It's like,
Yeah.
so it's like driving. Today I won't drive at 150, right?
Right.
At 21, I probably had some raw guts to do it. So, looking back, if you say, is it okay to drive at 150 kilometers? I can't say it's okay. I mean, just be careful.
And so, in the current scenario, how big do you allow any one stock to become in your portfolio? At what level of appreciation would you start trimming down the position?
See, in listed stocks, you have the luxury of trimming. In unlisted, we don't. It just grows. That's all. So, when you create positions which are not listed, then this trimming is not happening nowadays. First point. The second point is that you also uh, try to run some companies for 5 to 10 years at least. So consciously, I don't look to trim, but I trim where I feel the management is not that great. There are many companies where situationally you buy, like sugar is a situational bit. It's a contextual bit. Okay, and when everyone is buying and when there's huge noise, when you see in all our WhatsApp groups that people are bullish, I sell. That's when I'm hit by all the positive news and I sell. So that's how I trim.
In terms of initial bet, what is the largest you'll go, say, in the listed entity? Initial, the first sizing of the bet, say for the first accumulation for the first year or whatever.
Notice even last year I went up to 10-12%.
Okay. So you've stuck to the style of.
Yeah, it doesn't change actually. Who you are doesn't change too much. You only try to control yourself a little bit, but no, you can't do it too much. It comes back. You only control your behavior to some extent. It's only a minor calibration, but your personality doesn't change drastically. I don't think it does.
And so, taking this question to the cyclical basket, how do you diversify there? Are you concentrated in your cyclical bets as well?
Always, I am concentrated. I concentrate the bit. I concentrate on the bit, and it is intense. And when I am out of it, I forget about it.
Okay. So how important is forgetting about it? Because you may
Somebody
get
else will make more
tempted.
money after you sell. No, yeah, that will also happen. That has to happen. In fact, yeah, you start getting interested in something else.
Because in cyclicals, you may get tempted on the upside when somebody else makes a lot more money. And on the way down, because you've researched so much about, you may call it, okay, this is getting undervalued. So how do you avoid that
In
for
multiple
a period of
cycles,
time?
I have made that mistake on the downside, starting early. I slow myself down nowadays. That experience teaches you to, be a little lazy also sometimes.
So can you give an example of, say, in the previous cycles where you made a similar mistake of starting up early?
Well, you make it multiple times in steel. This mistake would have happened multiple times in the steel and sugar. In 2 cycles, you would have gone wrong. In the third cycle, we hit jackpot.
Tell the audience a little more about this, Sham, because there are nuances to it. Let's just say you playing this any commodity cycle, let's say sugar for that matter, or steel, and you are not able to time it, and you're early. Now, in this situation, what would you do? You're not looking at M2M at all, and you're just holding on.
Yeah, you'll have to wait. First, that is the price you pay. That cycle teaches you patience. It teaches you pain, so that you remember it the next time.
And you're not diversified either, so there'll be like whatever 3 4 stocks, and you're totally concentrated on that cycle, and you endure that pain.
Yes, it happened before. They will be 20-30% of the portfolio.
Like, say, a lot of people consider that cyclical investing, a lot of people actually are able to time it exactly. But what we've spoken to a lot of investors is there is a, say, a at times multi-year, multi-months period of pain after buying. And then, so the whole trade, say the investment plays out for how long? So consider you're playing a cyclical bet. You start on day one. When do you think you'll actually be out of that cycle? Say, for example, you play steel, sugar. So what is your hypothesis when you start? How many years or months it will take to actually play out?
See, it's very difficult. Luckily, in the last 4-5 years, we had policy driving. So we have started thinking that cycles can be played very easily and that we are very adept at it. Without understanding that it's the policy ecosystem that has helped us do this. Earlier, it was 5 years, 7 years, wait. And then you have weather patterns, global, and then you have the politicians coming and meddling in it, meddling to harm the investor interest, to make money somewhere else, maybe outside India. So all those factors are there. So you have to have a very clear understanding of what is working for you. Now you have the other extreme where you are very gung-ho on the policy and you overplay the policy actually today. If you see all these sectors, we are overplaying the policy. For example, today steel. India is going to increase its steel production significantly over the next decade. I mean, if you ask me, that's a given, right? But that doesn't mean you extend your investment hypothesis to say that you can jump and buy steel stocks. You have to buy them at the right valuation. Like you had them at very good valuations sometime last year. Despite the rally in the market, steel was not performing. That was a good time to pick up. Similarly, sugar, you have your lulls. Today, it's a very buoyant market. Again, you will get a lull sometime. So you need to actually catch these lulls and phases of pain and correction and get in.
So, what are the specific exit triggers for you in this commodity? Because I know you're not looking at price for your exit decision. What macro factors are you tracking to tell you that अब निकलने का time आ गया, it's time to exit?
I am a bit of a person who doesn't like crowds. So whenever the trade becomes crowded, I exit. I don't look at so much on the other factors. I feel that the crowd is a very good indication to sell. Too much crowd, you must sell.
And how would you know that? Is it the
You will know
shareholder?
that today it's easier than that's the only benefit of today's social media era. That's the sole benefit because it's so crowded. You can see hundreds of tweets, hundreds of WhatsApp and Telegram messages, and people sending you screenshots, big videos elaborately explaining the companies as if it's the only company you must buy in for life. That kind of thing happens. That time you can sell. I don't think you should look at macro, EPS, and all that. At the time, you don't justify the valuation. You just leave. That's it.
So I remember a specific trade of your close investor when he bought at the bottom of the cycle a forging company from an ex institution and sold it to the same institution 10x later. So this does this happen to you in terms of there are sellers wanting to sell it to you,
Yes.
and then in the upcycle, is that also one
No,
of
we
your
don't.
triggers?
So I don't have a broker who guides me
Huh.
to a seller. We don't have that. At least I don't
No,
have
no,
that.
I'm saying people seeing your position, asking you to sell it to you right at the top of the cycle.
100%. You can offer and they will take. You can offer it anonymously to any broker and it will go. You don't have to talk to a potential buyer. I have never done that. See, we are still outsiders in this system. Understand this. After 33 years, I am a complete outsider in the financial system. Because you have grown as an investor, it doesn't mean that you have influence. In fact, you're worse off as you grow because more people hesitate to talk to you. Actually, it works the other way around. I don't know, from the outside, it may look something else. We cannot go and show our interest that we want to buy anything. People want to play you. If you want to sell anything, also, you cannot say that you want to sell. People want to play you because we are outsiders. I'll never forget that word, outsiders.
Say you started in the 90s, and that was a period of time lot many people are not into the investment field. So when did you actually turn full time towards equities, and what was the perception of relatives, friends across?
Today, I don't work full time on my portfolio. I am today working for small investors. That's what I am doing because 2012 I decided to give up my manufacturing. So after that, it took me 4-5 years to actually transition out. 2018 only I have completely, 2017-18 I am completely out of it. So what I did was I started a small advisory activity in mutual funds. We started studying funds. Today we have a very good grasp of the mutual fund ecosystem. I can confidently say that we know their numbers better than they know it. Okay, but it's very, very dangerous and volatile to discuss their investments in the public domain. We don't want to do that. So I started these activities and we have been working. So that keeps me busy most of the time. I don't spend so much time on my personal investing.
So I remember there's a story also to you starting that advisory business. So if you can tell something about it, how it was,
So
you became a
2008, each of my friends who are in the system, whom we have all grown as analysts together, they are all now fund managers in 2008. They were raising each $1 billion in infra, right? So I was far more hot-blooded in 2008 than I am today. So I asked them, you are taking money from people knowing fully well they will lose. So one of them said that what is stopping you from playing the other side and stopping them from losing? Then I came back and I started studying the entire ecosystem of mutual funds from a fresh perspective, clean slate, to see whether there is something good in the mutual fund ecosystem also. Actually, I found a lot of good things. But understand one thing, where you should not invest, there is $1 billion sitting in a product. Where you should invest, there is sub 100 crores AUM. So as an investor, it was very easy to see that contradiction. So that is how I started getting curious about mutual funds. Then I said, why not I measure and see which are the guys who are genuinely good through a framework. And then we started identifying which are the good funds. And more importantly, we started identifying which are the bad funds. The guys who are not going to make money for the investor. We know very clearly. But we cannot tell that. And we were waiting. Then after the abolition of entry load, that day I decided, that morning over breakfast after seeing the papers, I decided to do something formally in that space. That's how we got into that. I didn't start a PMS and all that. Actually, at the time, I had not done this with some idea of, big AUM, money. All those things didn't come on my radar itself. We wanted to prove a point. So that's why we started that, and that's what we were doing. But not many people understood that. People thought we are coming to take fees from them, make money out of them. In India, everybody thinks that everything is about making the pennies. Okay, and they think that those who make pennies are getting very rich. And that attitude remains to this day in the platform era, where people don't mind making a lousy choice and losing 25% on the platform than incurring a very small insurance cost and getting good advice so that they are safe. But that has not changed. But this was my thought process. I didn't think about building AEM, big business and all that. I was just enjoying what I did because in my mind I wanted to be busy and I didn't want to be a full-time investor. I still don't.
So the next challenge, was there another challenge when you started PMS?
PMS, we started out of a clear identified need. That is, I understood that RIA is not going to survive very clearly because first, if you're a professional doctor, lawyer, chartered accountant, anyone, that profession should be respected, okay, by all stakeholders. What I saw was that nobody, and I will not name the stakeholders who maximum disrespected, I found that nobody respected the profession and expected the profession to be successful. I don't know how it would be successful. So I saw that writing on the wall. So that is when I decided that we need a better way of operating. And then the second thing I found was with number of investors, maybe about 10 to 15% of investors at that time. Now the number is down to a very small number because I don't take such investors on. You tell them what to do, they will not do what you tell them to do, and then they will come and tell me my returns are poor. You are responsible. Why would a good professional waste a time with such a person? Why would somebody who's respecting his work want to work with such a person? Irony is, people think that I'm paying you, so you have to, do what I tell you, right? Who wants that money? So all these things struck a raw nerve, and I decided that we'll manage. If people trust and they give us money, we'll do a good job. We'll be accountable fully. Let's not be accountable for his idiosyncrasy. So that is what made me shift to the PMS.
But Sham, isn't you spreading yourself too thin because now at present you're doing both? Uh,
No, no.
okay.
I September 30th I stopped. I stopped RIA almost completely. I have maybe low double digit number of clients in RIA. That's all. That is because of circumstances. I need to service them, relationships, some few things. No, absolutely zero RIA. I mean, it's not a growth activity. It's not something which takes too much of our time. I'll put it that way.
Yeah, the numbers are dwindling for RIAs any which ways.
I don't even know, Nuresh. Honestly, I've completely switched off because once there was no respect in that profession, I lost interest. It's very simple, Nuresh. See, there is an assumption in India that good professionals are only after money. As long as you have the assumption, you will not even identify who is a good professional. Honestly, you're not looking at where you.
Yeah, but I'm not even sure what's wrong in earning decent money. I mean, if
I,
you are providing a good service, you should be charging money.
I agree. In the end, any investor I've had relationships with, I measure what is the performance before I go on to a discussion with them in the room. I never go without measurement. I don't go for bakwas conversations with the investor. Never go. I never, as a habit. It's a habit. Even if it is 1,000 rupee SIP, I'll see the sheet and only see that person's face.
So, how do you handle this behavior gap in the mutual fund domain? There can be the similar thing that you mentioned, Sham, like the audience doesn't, the retail, your clients don't listen to the advice that you're giving. How do you handle that gap?
I get rid of such clients. I parachute out. The earliest opportunity, if they say they're going, we'll let them go. I'll never try to retain them. It's not worth it, Manish. Your health will be spoiled. We are here to do service. We are like nurses and doctors. Even if they don't even give you, you're a specialist doctor and doesn't even treat you like a nurse. Why should you do that work? I don't understand.
So, in that sense, say you've seen over the last this many years, you've been an investor, you've been a say somebody who's been an entrepreneur, you've been now on the unlisted side also. Which is the most say challenging period you had as an individual in whichever cycle or whichever profession? Which was the most challenging period?
For me personally, the most challenging was 2020 to 2021. Because in my mind, I had not done a thought about what will happen if I am not around. I have not thought about that. And that did not get answered very easily. It required a lot of work. So that was a very difficult phase. And health is an issue which is a black box. I'm never comfortable with health related worries. maybe due to my own past learnings in life and family and other things. So health is something which definitely doesn't give me comfort if it's a serious concern. So that way, the COVID phase was the worst. I was not thinking about investing and all much, and I felt very very queasy about investing in that period. And I'm surprised how people are able to focus on making money at that time. My mind didn't lend itself to that, honestly. You can call it incompetence or whatever, but it didn't lend to that. That's all.
Interesting that you mentioned that, Sham. I've spoken with who's who, and everybody echoes precisely this point. Not many people were able to buy this dip because when you see despair and death around, money is the last thing on your mind. Yeah.
No, I bought and all that. Something happened. All those things are there, but it was not a phase where you are having your heart and soul was not in it. Just we are trying to protect the client at that time. That was the primary. So handling their worries, handling their concerns. So that took 70-80%. Then in my own concerns after that residual. Where do you have time to become aggressive? You are having responsibilities, right? You don't want people to lose money and then tell, "Oh, I went to these people. They didn't do a good job," and people didn't understand that phase. So many people didn't understand. We're dealing with all their fears, concerns, and then our own fears. Second, so it was not an easy phase that 1 year, but 21 I stabilized. 21 I stabilized, and then 22. Actually, the last year was better for me than probably what the COVID year for many people. I'm myself surprised by that.
Stoic Talks has been partnered by DSP Mutual Fund, which was an obvious choice for us, having interacted with the DSP team earlier and recognizing how they are obsessed with helping investors take better decisions. Some examples of their motivation to help investors do better are visible in their research related work, which they make available for free, including Getting Smarter, Tathya, Report Card, their Invest for Good blog, among others, and many more reports. We thank Team DSP for supporting this episode of Stoic Talks and recommend that you follow them on Twitter. Their handle is @DSPMF.
So interesting is the case about 2020 that everyone who had spent a lot more years in the market was defensive, but the whole country, in terms of getting into the markets, it could never have been a beautiful period in terms of where the stock prices are at lower valuations and participation is increased. I think even in my small period of time, I've never seen participation come at the bottom of the cycle. We've seen top of the cycle participation uh, across the years or maybe across history. But this was very interesting. So, how did you say you would have got a lot of flooding of suddenly clients coming up also? So, how would you balance it out? You have confusion in your mind. Okay, these are all the problems which we understand. And what do we do about these clients who just want to get in?
No, we have not dealt with such clients in 2020-21. That so they've all gone on their own. So probably, I assume. 2020-21 we are not done. We have only maintained whom we already signed up. We took care of them. That's all. No new listing. It's only in 21-22 the new people started coming because they saw how we had weathered 2021. That was the real advertisement for us. How we managed 2021. Then 21-22 we had a lot of signups. And 22-23 increasingly more, and it's increasing again. That gradient is on the up. But we didn't go out to get business, or we didn't tell people, come, we'll do this for you, or we were not trying any of that. Actually, we were only attending during COVID to the people whom we had already committed to work, and to those people. New was very low in 2021.
So, Sham, you said 22 was a great year for you guys. Was that the Fisher style investments or
Yes.
the turnarounds?
Yes. Also, some of the investments which we made earlier on betting on manufacturing, infra, they all started firing like anything in that year. And they're still continuing to be quite buoyant, actually. So the Fisher style has worked very well, and I think it worked much better once the froth started settling. Because earlier you had all these guys who are supplying medicines for COVID, making 20x and all that. We were not part of all that. In fact, we felt that it will not sustain, which is true also, but it's a very difficult thing to say at that time. And probably we shouldn't have said.
Because moment you said and they went up another 3x. So
No, actually not. We waited and only said when we after we said it, not that much.
that
We're not
didn't,
so
yeah.
no.
So a lot of people were early disbelievers and they had
Yeah,
to
yeah.
face a
No,
lot
I
of
was
flack.
quite late to that to ringing that bell, so I didn't ring that bell early, luckily, because then it will become even more difficult. Another side will get triggered. No, I was quite late to that, and we knew that what was happening was too much froth, and it has played out also. You've seen. People are still buying the dip and getting trapped in lower top and lower bottom. Nuresh knows it better than anybody else. So that is
The participation keeps increasing.
it's increasing now. Yeah. So even now I don't tell anything actually. I don't even comment about it. Let them worship their gurus and go to heaven with them. They will all get Jannat in Pharma.
So this is where it gets interesting because we've had discussions wherein you said that you are also open to actually trade in and trade out of companies which you understand, even though it is not as huge a move you want, just because something is just too situational, you've done that. So is it that you have a core and a satellite portfolio?
Yeah.
So
That's
explain us, how
reducing.
do you do that?
It's definitely reducing. I'll tell you why. Because the amount of capital I commit to all this is not more than 10-20% of my total net worth. Yeah, it takes a lot of your time. The other things are actually, on cruise mode. You don't do much actually. So your best performing stocks, you've not done anything for 5 years, and they are giving you huge returns. And that's what happened to me between 2010 and 2018. So the same thing is slowly again showing up between 18 and 23 also, and I expect it to increase over the next 2-3 years because only 3 years or 4 years is the average holding that has happened. I believe in the next 2-3 years it could be significantly better because nothing has changed direction. Everything is going in the same direction. So 70-80% will be only in that direction. So there's not much to do on that score. So it's only with this little bit of action we have in the 20-30%.
So you can explain us how you used to do it in the past. We'll learn from that. Running a satellite portfolio.
No, you know what you cannot hold for 5-7 years. No, you know that very well. Though you feel it could go up and all that, it all happens very fast. Your best ideas, money should have made the money within 12-18 months, 24 months, not 7 years. I mean, you're able to sense it. That's what you call as momentum investing. You're able to sense it, right? So in the satellite, you will have all those things where those shades will come.
No, what Nuresh is probably asking is that when you initially started, this 70-30 must have been 30-70. Is it?
In 2010, yes. Yeah, it changed. Yeah, it turned. I have not allowed it to go back the other way, luckily. Yeah, you're right. In 2010, it was, the 30 has become 80. You're right. So slowly, so once it becomes, it still guides you in a certain way. Destiny leads you to many things. Yeah, it's not your genius. So events take you in a certain direction. Your portfolio teaches you. You are not controlling it. It controls you after a stage.
So tell us about 2010 to 2018 because that is where you hit a lot of home runs in a lot of companies, sectors.
Because
because you're out, you might be out of some of them. You can actually take us through a case.
Number
How
of
you
companies actually. So we were able to buy multiple building material companies at the bottom of 2010, 11, 12, 3 years. So went on buying. And they all went up multiple times, 20, 30 times. Then we had shares in Hudson Agro, which we had bought between 100 and 400 crores. So that was another one. There are multiple companies. So we got rid of a lot of cyclicals. Actually, my portfolio by 2013 had zero cyclicals. I went back into cyclicals when I sold these companies. Understand that? I went into sugar after selling these companies. And then I got out of sugar once, then again got into sugar, then again got out of sugar. Now I'm again back to that 2010, 11, 12, 13 phase of investing. That's what I'm trying to rebuild now. Because I feel
How would you say in these same companies? I remember a lot of these companies went through 2, 3 years of not being recognized, right? Even though things were going right, earnings were there. So how would you actually create that patience and build a lot more? See, one is you own a position where you are convinced, okay, this is this much part of the portfolio. How do you scale up even though the market is not recognizing what you are seeing?
see, luckily, the macro theme of Indians building homes, getting better infrastructure, when you go out of the city to suburban areas and see how people are rich are living, it is so obvious that it was not sustainable. So once I was also moving a lot at that time, going out, meeting people, seeing agriculture, seeing so many other, seeing how the rural rich were, seeing how the cities were expanding, talking to multiple industries. So all that kept me busy and always convinced. I didn't talk to investment world people to buy these ideas, and I didn't get the reinforcement from people within the investment industry. I never did that. In fact, anyway, I don't think anyone is so interested in talking to me except those few friends I have for the last 20, 30
Many.
years.
So, in way of recognizing is market prices also recognizing it. Did not be just investors, right? So, if you see earnings go up 100% from the time you bought, and the stock doesn't go up 15% also, that is also not recognizing by the market.
Luckily for us, the market always recognized with 1 or 2 quarter lag. So, it helped. The lag was not so bad. If it happens for years together, I can understand what you're saying. But it was not so bad. Actually, 2012 onwards, once Mr. Chidambaram came back as finance minister and started mending the economy, directionally, we had 5, 6 good years of inflation control and things like that, which all helped the businesses where we were invested in, right? So we were able to hold on. I don't think we faced so much of difficulty. The difficulty came only after the valuations went crazy in 2018. 2018 was difficult. I knew that you had to save yourself in 2018. Once 2017 ended and 2018 began, I knew it. We were able to save our clients. We sold all their mid-cap funds before the budget, like perfect timing. But खुद का बेचना उतना easy नहीं है because you have bought big positions in companies. You can't sell actually. And we don't have the cloud to sell. I don't even know who is the institutional broker who can sell the lot. We had grown and not prepared here. It's as simple as that.
You have to come on TV to sell.
No, I didn't come. That was again something I found continuously violating my freedom because they tell you come on TV, we won't ask you question on stock or 5 minutes ke baad they're asking. I felt that it was very embarrassing, and I'm not a person who wants to be personally rude to anyone. I may have strong opinions, but I don't like to be personally rude to somebody on TV and all that. It's not my style. So I withdrew. In fact, you will be surprised. Since I started my PMS, I have not made a single television appearance. Zero. And even before that, I would have had 3 or 4 in a year, which I felt was unnecessary. So we stopped all that. So we don't know how to sell. It's because you don't know who is the buyer, and otherwise you have to sell every day. We are busy working for the client. So you are the last priority, like doctor forgetting to take his own medicine.
Yeah, like we say, doctors are the worst patients.
Yeah, so it happened. 2018, it happened. And then you had 2020. In 2020, I said, okay, let me go back to my 2010 to 12 phase. I consciously said 2 years, I'll reset myself back to that. That's what will work for what work I am doing, because you should not sell. You should hold for 5, 7 years, and you cannot do all this where there's a need to change even once in 2, 3 years. It's difficult as a professional.
So, in these small caps, have you have you ever met the managements, or do you think management meeting or attending AGMs, or what is your preferred way? Going scuttlebutt? What is your preferred way?
So, Noresh, in the 90s, I learned all my investing doing that. Going to AGMs and meeting managements. Otherwise, management won't meet us in those days. Even now, I find a very peculiar thing which I am going to share with you. I may own 4%, 3% in a company, 2% in a company. Management conducts an investor meet without inviting us, even sending us a cursory invitation. This happened in multiple companies. Then management takes into confidence some other investors whom they think are, influential. Okay. And then they tell them things in private. I am very uncomfortable about all these things. I sell and exit such companies, even after hearing that information which they said in. Like, I don't want to work with this kind of companies. This happens all the time. So I have simplified in such a way that today the structure is like this. My analysts attend the con calls. I personally don't attend any of them. They send me the update. And then if I really need to listen to a con call, I read the transcript. It's easier to read than to listen. Uh, that's it. Very few managements I have met. Handful. Very few. It's difficult to get meetings also. Let me say that. Unless you are from a particular geography, it is difficult to get meetings from Indian managements, even today.
Okay, is it Sham? I thought we have gone past those days. No.
No, it's not so. It's a misconception.
The whole institutional industry works on managing the meeting, so let's not go there.
No, it's fine. We accepted that reality.
But
So
the point is, AGMs is where we've seen a lot of investors. Say initially, I think all of you older investors used to attend AGMs where at least the management is forced to at least answer a few questions.
that is how we learn. Correct.
Sham, tell us something about your asset allocation, let's say between real estate, equity, and debt.
I don't have much debt. I'm not a believer in debt that much. I have public market investments, private market investments, and real estate. So you have to understand one thing. My family, before I came to stock market, had 5% to 10% in the business, 90% real estate. I didn't flip it the other way around to that extreme, but to a significant extreme. Over 28 years, we had reversed it by 2018, where the equity was very high and real estate was very low. Over the last 2-3 years, I have again reversed it a little bit. So real estate is about 35-40%.
So you've allocated more to real estate in the last year.
Yeah, 40 because of today's valuation, but I would have allocated some 25 or something.
So I think I remember another case wherein you bought your say holiday home with a particular stock investment.
Yes.
I think you should take us through that trade as well as the decision to do that.
No, see, when I was having a capital of 10 lakhs, I went with two of my friends and we sat in a holiday timeshare resort by the lake. We went to ideate. Those days we would go sit for 3-4 days and discuss ideas freely. So we get all the time, morning, evening, night, like we meet in various places. Same thing. Those days, 93. So that time, one day while we were walking, my friend and I had this jocular conversation that in this crescent, it will be nice to own a house. And we kept on discussing that joke for nearly 20 years. Then sometime in 2015, I went to visit a family friend who was also my client one afternoon on a Sunday. He said, while I was leaving, he asked me, very softly, he said, I have this thing. I have one project. I want one person to buy a property. I asked, where is this place? He said, he gave me the location. It was in that crescent, exactly. So I said, if you will not mistake me, can I buy that property? I didn't ask the price. I didn't ask when the money had to be given. I didn't ask whether you can get a loan on it. None of it. Because it was in the crescent. He said, if you are coming, that will be great. And I have a very high personal regard for that person. He is very close to our family. So the decision was made like this. It's not a calculated decision or anything like that. Then I had to arrange the money, which was very, very high at that point in time. So I saw my portfolio and said, which is the most expensive stock, and I sold it. And I paid for it. No loan, nothing.
And I think you made a lot of money on that stock also.
Yeah, it was rich. When I sold it, it was rich. Today also, after 8 years, it is still 25% above the price I sold. That's all. It was very rich even at that time. So I think that destiny made me do that asset switch. It's not a... So similarly in 2020, 2020 also I got another property like that, similar. Uh, Very good seller, casual conversation, and that's how it happened. It's not something where when something comes, you act. You don't delay.
Because this is where there is a lot of problems with the way new fin tweet influencers say you should not buy properties, you should not do this, and you end up old age with a lot of money and nothing to do. And this is what we've seen with a lot of investors. Okay, there are times where they've made investments which are purely because you've gained so much in life. This little asset allocation change will not change your life. And anyways, most of you have continued to be on the same lifestyle.
Yes, Marishi, I don't understand how somebody who has got so many strong opinions will first live life. I mean, I have seen my father tell me that, in life you must buy a Mercedes. Okay. So when he got the money, enough money to buy the Mercedes, I asked him, why don't you buy the Mercedes? He said, I don't need it now. Right? Yeah. He said, now I don't need it. So I realized that when he needed it, he didn't have the money. And when he had the money, he didn't need it. Simple. This is what I learned from my father's life. Most of my learnings are from my grandfather, my father. It's only from them because they worked much harder than I did in much more difficult circumstances, and they had headwinds all their life. We are all people who are products of economic tailwinds, printing money and all sorts of economic tailwinds, liberalization. Then you're a beneficiary of digitization. So many things happening. So I realized that whatever comes your way, if it comes early, it gives you opportunity to live. And telling people not to live that life, which they have yearned, is not wisdom. First of all, you should not listen to such people. But you have millions of followers for such people, and that is the order of the day, and I accept it. I'm not in any rat race with any of them. I enjoy my life. They are in misery. So, fine. That's how it is.
So, going into that same part you've learned from your fathers and grandfathers, I think you have a coterie of Chennai-based investors, which you have been, I think, maybe for multiple decades now, where you sit and discuss. So, how has it been in terms of learning? Say, how important is it to have that, say, core group of people where you can actually be open to talking and taking criticism, etc., and how necessary also it is?
It works very well when it is early days in wealth creation. As the wealth creation goes up, it stops working. So, the profile of your own group, you will have to form group with people who are in early days of wealth creation. You should go have the humility to mix with people who are very, very young, who are all ambitious, learning, and talk to them, listen to them, and learn what their thought process is. While the old circles also exist, I believe that the newer circles are more important. The 22-year-old, the 23-year-old, the 27-year-old. They are the new influential circles in my life.
But why would they hang out with such an old man?
Must ask them. I have no clue.
So initially, when you used to discuss all of y'all, how did it help in terms of say a big bad year? Did it help a lot more, or it was a problem in terms of biases between each other?
It is a big problem of biases between each other, honestly. Because somebody who has been wrong will take it personally. And somebody who has been right will also take it personally. And you have to engage these two sections. It's difficult. It's very tiring. After age, you don't want to. You would rather engage with young people who think you're an old man than with old people who think they're young.
Sham, via negativa is a phrase that means you learn much more from your failures than success. Can you walk us through some of your failures and what did the postmortem reveal to you?
Oh,
And
the
also, while you read the topic, please help us understand how do you do a unbiased post-mortem of a mistake?
No, I will give you one, and that is enough this thing for this thing. See, what we think in our mind is larger institutional investors, when they make bigger bets of money, have better due diligence, have better boardroom monitoring, have better independent directors, and mechanisms to steer businesses out of trouble. This is the thinking that we are all grown on. If we blindly bet on that thinking without our own individual processes to validate whether they are doing the right thing, we just go behind them thinking that he is very strong, so he will protect us, then you will be sunk. Because he fails, we all fail. I think that has been the biggest um, learning of my career. I think that I overestimated private equity investors, especially large firms, global firms, and I think I took them for granted that they will have good processes. It didn't work. It worked very badly. So once I understood that, then I had myself become a private investor and built my own ecosystem of people and friends who we collaborate with. So that way we are much better and on top of situations today than we were 4 or 5 years ago. So that was the biggest learning. So after that, I don't take any big investor very seriously, because today he will be an investor, tomorrow he will say I'm a seller. So we are not like that, right? Even with much smaller positions, we are looking at 5, 7 years. And we cannot afford to take the kind of failures they take because of their fickle nature and their lack of application. That has been my biggest learning. And I hold only myself responsible. I should have thought that private equity is so robust.
So, any particular say investment where you thought you were gung ho and it fell right on your face, or any theme which you were way too early? I think that has also happened with you.
That even now, 2018, it happened in tourism and travel. 2018 to 2019, we are becoming gung-ho. 2020, you get COVID, and then it explodes on your face. It happened as late as 2020. It happened. Tourism and travel was one such sector. But see, I'm also quite quick in spotting opportunities even in that crisis. Like for example, we were invested in travel and tourism. I raised my bet in 2020 at the bottom in both private and public market investments. The public market investments have done modestly. Uh, one has done very well, one has done modestly, but the private market investment has done exceptionally well. So these things happen. We learn. Company going to zero and then you're putting more money on it. Like it's not easy. So in 2018, here I was thinking that there is this private equity investor who is a smarter guy, following whom I can make money. Within 2 years, I am myself a private market investor, putting my money where my mouth is. That is the transition. It's easy to see the failure, but the failure and the lesson happened within 2 years for me, which I count as a blessing.
Stoic Talks has been partnered by DSP Mutual Fund, which was an obvious choice for us, having worked with the DSP team earlier and recognizing how they're obsessed with helping investors take better decisions. Some examples of their motivation to help investors do better are visible in their research related work, which they make available for free, including Getting Smarter, Tathya, Report Card, their Invest for Good blog, among others. We thank Team DSP for supporting this episode of Stoic Talks and recommend that you follow them on Twitter at DSPMF. Yeah, so in your travel example, I don't think it would fit in the failure list because it's an unfolding story, and Corona happened, which was like from the left flank, and you added up. So this is an unfolding thing. Wouldn't really term it as a failure.
Manish, you are assuming that solvency would maintain in such situation. The company could have gone insolvent. We have recapitalized at that point, shown conviction at a point when there was no conviction anywhere around you. We have failed and again become successful. The circumstance may be the reason, but business failure happened because of circumstance. I can't blame circumstance.
Correct.
It's a real thing. It's like running a company. If it goes like that, you need to work your way back and you need to put money on the table again.
So any case where actually the things did not play out at all. See, in this case, it was external, where you thought X hoga hua Y types. Anything you remember from the past where, see, because you have played a lot of themes, right? And I think a lot of your small cap investments have always been thematic rather than, say, any other ways to look at it. All have been themes, whether it was home building materials or, say, any growth companies you've taken, right? So anything where it went opposite to what you thought. Say you thought the theme will play out and it did not play out at all.
See, I think we have been early and got wrong. Too early has been multiple times. Many things would have happened like that, where we would have got in too early and then waited 4-5 years and then we go out and then 3-4 years later it plays out.
So any particular thing. So that is how we'll get to know some sector. Okay, how thematics can take much more than you think, much more time.
No, it happened even in TTK Prestige, where we were so early. I got in at a valuation of 21 crores market cap. Understand that?
This was in.
I think it was early 2000 or late 90s. One of that I forgot the years exactly. I don't know. I'm not sure whether it's 99 or 2000, somewhere around that period. Maybe in the 90s only, late 90s. So because the 4 years after that, it's not 2001, it's 90s, late 90s. So that happens. It has happened multiple times. We were very early to that party. It took off in 2007. Understand? 9 years later. So we made money, but not the money which we should have made. Okay, so that is one case. Similarly, we sold out of these Amin stocks at a very good valuation. Actually, we sold at very good valuation.
Yeah.
Uske baad bhi, I think they went 2x or something. Now it's below even what we sold, probably. I have no regret. I am not a froth merchant.
I remember one of these companies, the first time I met you back in the day, this was one thing which company we discussed, and that was a company which had a little lower respect in the markets.
Yes.
Because of diversification.
But no, look at it this way. I bought it for 40 rupees and sold it only as a multi-bagger. I should not have any regret that I didn't take the maximum froth out of it. See, once you decide to be a froth merchant, one day the froth will run down and get to you. So that is something which I never regret. But you will have to deal with the temporary phase where you sell and it goes up.
But how do you accept, say, a lot of these small companies, right? We have something which you call the company is great, but these are the black areas, like we call masala thoda zyada and namak zyada. How do you, what is your factor of digesting? What is things you can digest and what you cannot digest in a small cap company?
So, for example, there could be one division which they should not be. I'll give you a classic example. There will be one division in a company which they should not be doing at all. I would think that it is the promoter's intelligence. What if he has got a house? Now, when you take a very, very large company today, which is 30,000-40,000 crores, when it was 3,000-4,000 crores, the promoter bought a house in my city for 100 crores. It's still been a multi-bagger, no? So, okay, TK, this is that fellow's intelligence. Despite this, is this business good or not? So, I just take that completely out of the equation. Whereas people obsess over it. I'll take it to zero and say this is zero. It's not going to hurt. If it doesn't hurt, it doesn't pinch the company's cash flows and pocket, just ignore it. Think it's that fellow's stupidity. Look at the good part and see what you'll pay for the good part. This is how I look at it.
And what you cannot digest in a small cap. Or say you made an investment and some years down the line, they do something. what you cannot digest?
I cannot digest promoters playing the market, first thing. And I cannot digest investors playing the promoter. These are the only two things. Any other business related thing, economy related thing, I can digest.
So this is where, say, when you go into small caps, this keeps on happening, right, over the
It
years.
happens. You have to. We live despite that.
So, say now today, when you look at it in terms of small caps, I know a lot of companies where you've kept holding for many years, and the things have not played out, right? So, how do you question yourself, your own thesis? Okay, I had thought this. How long should I wait, or how long should I keep remaining invested in the theme, or you just say because I thought I'll stay?
Sometimes once I have stayed very long, 7, 8 years, when I get something better, I say that maybe destiny is bringing the other one before me so that I move a little bit out of this. That's how I move. There are many themes which are policy related. For example, I did not expect the fertilizer team to work so much, but expected the drinking water team to work better. Okay, the market did the reverse. The managements of all these water companies are also to blame. Tata's went and merged into Tisco. Somebody else did something else. So, and now the whole team is at a very mature stage domestically. So we have to see whether the international business will come to them. I've already spent 7, 8 years. Why should I spend another 5 years? If something else comes, I will move to that. As simple as that. See, apna time ho gaya na. You have overstayed already, and then whether you're going to stay longer. I look at my tenure. I don't have too much time to do things, right?
Interesting. In fact, Sham, isn't the opposite is true? Because a lot of times you can suffer from sunk cost fallacy. Now that I've spent 7 long years in it, maybe its time is about to come. I should stay longer.
No, at that point I see what the management is doing to give me comfort. Give me not me. Give me means not me personally. Give all of us comfort. How is that? Have they improved over the last 3, 4 years? Their public communication. Are they giving clarity? Are they saying no? My competitor will know what I'm doing. That kind of nonsense which they talk to mislead shareholders. So I look at that, and where I find that they are not giving me even a fair opportunity to evaluate them, I get out because I have trusted them for so many years. And they're still not giving public information. Let them at least do a con call or something and tell everyone. If they're not even doing that, I feel that I'm just living on hope. I don't do that. Once I feel that they're not doing justice, I'll get out. You can argue that you could have done this long ago. We are betting on a theme, a business, and stuff like that. Finally, when the management is a letdown, the theme or the business doesn't matter.
So essentially, when we go through this discussion, we realize most of your investments are 5, 8 years. So it's almost like you're doing private equity investing in the listed space in the small caps.
That is what gave me returns. Honestly, that is what gave me returns. I have not been successful in making fast money. And whenever I tried that, I would have probably failed. So I don't try that at all.
This is very interesting, Sham, that you mentioned that because as an outsider, when I uh, when I read the book and also listening to your conversations, my impression was the exact opposite. I thought you made majority of your money in the cyclicals.
No. I make some money in cyclicals, which I put in these kind of companies and make money.
Is it because cyclicals and all those take a lot more time, more often compared to these investments? Because once made, you're not making a lot of decisions.
No, I think this misconception about cyclicals money is because my name appeared in the shareholding patterns of cyclicals, whether it doesn't appear on the shareholding pattern of other companies. So people think that I'm a cyclical investor, which is not true at all. And some TV fellow will say that this person is a contrarian cyclical. They will use some adages for which I am not responsible, but they stick what to do.
So going back to say you've gone into private equity investing also, right? How has it been? Because I think it is only the last 5 years or last 3, 4 years where you've participated a lot. So how can you change thinking over there? Like being a listed equity guy, mutual funds, small caps. This is the last thing which was left, I suppose.
So there I am looking at how we can build a business over 8, 10 years. So my own manufacturing company, which is a family concern, in 94, I wanted to exit that business. Personally, I wanted to leave the business, but circumstances didn't allow that. Though we had decided, it didn't happen. Do you know when it happened? It happened in 2018 finally. 2012 phase 1, complete exit happened in 2018. You take even 2012 as the early exit date, right? 94 to 2012 is 18 years. I tell myself that today where I am investing, I will be out much earlier, and it will be run by people who are really charged to take the companies to a better place. So my orientation has completely changed in these companies where we think like business owners and not like investors. So we want to take those companies to a level in which they are publicly valued and where the price discovery happens every day, maybe in an IPO or whatever. We are not looking at taking a company to a certain size and then flipping it to a bigger buyer. That is not our intention.
So the whole cycle is where you want to be
Correct.
invested.
Correct.
And Shyam, are you concentrated there as well in the unlisted spades, or are you diversified?
No, concentrated.
This is one thing which we've noticed in all our stoic talks is we speak to investors and they say concentration, and then you go to the internet, they'll say you should diversify. And the worst part is diversification because of that starts at an early age. But 99% of all our conversations with investors tell us to start concentrated. So how do you actually say, if I'm a new investor, how do you actually tell me, okay, this is why you should concentrate?
See, it is not a strategy to concentrate. Firstly, if you are able to raise your conviction to such a level, you concentrate. If your conviction is not at that level, don't concentrate. As simple as that. Simply saying that some other investor was successful concentrating doesn't mean that I can concentrate.
We consider, say, conviction is there, but how do you get the guts for it, right?
The guts always come when the valuations are in your favor. In 2018, I don't have the guts to concentrate. I diversify. In 2022, I am concentrated. Because 21-22 gives you that opportunity.
So one of your rules is concentrate when the times are bad.
Correct. And see, diversification happens only when the opportunity comes. Suppose I have money today, and in the next 1 year, there's going to be a funding winter in private equity. If I get 7-8 opportunities and I'm able to put certain sums of money, it will become diversified. You are driven by where the opportunity comes from. If there are no opportunities and you only see a few opportunities which are very, very attractively valued to you, there you concentrate. It's all driven by what you are comfortable, what is your style, and what is the market giving you as an opportunity.
So how much, importance do you give to cash? So do you hold cash or at point of time shift, or do you leverage?
I do leverage at times. The idea is strong, I don't wait. Then I have to deleverage also after a period of time. Because what happens, the window you get to buy is only 6 months, 9 months. I can't wait for one stock to be sold to buy another stock. So that happens. I'm not so much of a investor who holds cash all the time. But having said that, I held some cash from 2006 to 2010. 4 years. That cash I deployed in 10, 11, 12. That is also a reason why I was able to accelerate my investment performance in that decade. So again, I have to create that cash. I don't know where it's going to come from. I feel this decade also will get that opportunity. So that is something which I need to do.
So when was the last time you leveraged a lot, or how did you decide? Or when was the last time? You don't leverage a lot, I suppose, but when was the last time you had to take that decision?
No, from 13 to 18 continuously. We were quite aggressive.
So you kept on buying 10, 11, 12, 13, and then you kept on holding
the
all
value is
those.
also going up. No, you're able to add ideas. Only post 18 we have been shrinking, and again now if the economy supports, we will take opportunity.
And how do you handle drawdowns in leverage? Because leverage is a two-edged sword, right?
You must have such huge collateral. You must have maybe 6-8 times. If you have 8, you are comfortable. At least 6 times you should have.
So basically, 20% on the portfolio is roughly the leverage you'll go
Is the
max.
highest. Yeah.
That's the max.
The 10 or 12.
Doing a reverse calculation.
Yeah, correct. That is the highest. That is very high actually. 10 is my number actually. Sometimes you'll be on the other side because of the ideas.
So that becomes manageable all through.
See, if you're right in a cycle and you take leverage, you can create huge sums of money, and there are many investors. I don't want to name them because it will appear we are comparing with them. That's not the case. But I am saying that that is possible.
So you've been an outsider, right? As you say. So any of the outsiders you respect a lot, which nobody knows about, or even if they know about, they don't know how, say, intensely they've helped or you've got inspired.
See, our circle itself is people who are not that, who are the same type. Some of the friends go on to become institutional investors. After that, we don't talk to them. See, many people in our circle, they grow to become very large investors. After that, we cannot talk to them. It's not easy to talk. So again, you will see new people who are coming in. So it's a cycle. You move with newer and newer people. See, you and I didn't decide that we will have a conversation. It just happened, right? Similarly, it happens so many things. Suppose I have a doubt, I will suddenly ask you some opinion. Like that, we ask so many people and learn from them what they are thinking. And that's how it is. So there are lots of people. India is full of people who are learning on their own and sometimes having very sharp assessment of companies without being in the inner circle of those companies. There are a lot of people who sit in the galleries and have better view than people who are on the.
So do you think it was an advantage that you guys were out of it in terms of, say, the whole crowd which was there chasing a lot of things, and you were sitting on the outside and watching?
It's very helpful. I am very uncomfortable being in that crowd. For example, I would not be comfortable going and staying in a hotel and attending some 15, 18 management meets in 3 days and all that. It's not my cup of tea. I can't do it. So I am better off just sitting in one place and discussing with people, and then suddenly something coming up, and then we're getting into it and reading.
One thing we've noticed over the years, you've become more candid on public media also. So how have you been? So at times people tell a lot of your tweets are cryptic. So how much time does it go to make it cryptic and hide your actual views?
So to be frank, I think being candid is a mistake. I regret it. But I still have those bouts where I say some things. But I believe that I am slowly learning to not say. So it doesn't help, Nuresh. Everyone takes everything personally. And then you have, I know people who are affected immediately will open an account, and with one follower, they will come and abuse you. You will know actually who these people are. So it's not worth it. Who are we working for? Somebody who doesn't even appreciate what you're saying. You want to flag something. It's not against the person who is benefiting from it. It is aimed at the person who may be affected by it. If that person also joins hands with the beneficiary and he starts abusing you, what's the point? No use.
Yeah, there is no upside to.
There's no upside, only it's a lose-lose, no pura downside. Why should you do it? Whereas in the earlier years when it was non-social media era, you are appreciated for being frank and outspoken. That is what we had grown upon.
No, but in fact, before you joined us, me and Nuresh were talking about this. This is something that we like about Shyam. He is one bindas, candid person. So he speaks his mind, calls spade a spade. So, but you're probably right that there are not many people who appreciate this nuance. Yeah.
I will tell you one interesting thing. So, in the 90s, there were certain personalities whose investing are not worth writing home about. Although they have become very big stars in social media. So now, what they say runs contrary to what they did actually. We remember what they did actually. But the guys who follow them all think that they are God's gift to mankind. Right? I'd rather just let it be. Sometimes I used to point out that, remind them and all that. Then I realized it's not worth doing. So it's I think social media era is about projecting something about you which is you're not actually. We have not done that ever actually. So in fact, I have never discussed where I have been hugely successful or told people that I'm owning this, you please buy this, or try to say that we can at the flip of a coin, ideate something new. It doesn't work that way. We don't know when you will get the new idea. You know how long you have to wait. You don't know where you'll go wrong. So many things are there. So we are not trying to project some kind of infallibility. It's, we accept that it's very fallible world for us.
So a recent initiative we've seen is you've been creating YouTube videos uh, more often and also to a focused audience. How did this come along?
I wanted to distract myself from the noise of Twitter, and I wanted to say things in a more calmer and a more composed way. So I started doing in Tamil because here the thinking in the Tamil world is more hostile to good economics than in the rest of India. We are a developed state, but we are not a state of developed economic minds. So our thinking is very socialist, and people who are earning lakhs of rupees in Cognizant want cheap petrol, cheap gas. That's the kind of thinking people have. So I felt, let me talk to this audience, a difficult audience and a difficult place to interact. So I started there, and over a period of time, uh, I learned to say things in a more patient way, where people are able to catch, and there's nothing cryptic also. So I say it in very clean, simple language. Hopefully, I will do in English also. Subsequently, I started in English also. I have a channel which has got about 10,000 following. Very slow. It's also like my investing only. So
Activity comes in bursts.
it may come, it may not come. I don't know, but I'm just doing it to distract myself. One thing I learned after going to YouTube is I don't go to anybody's timeline on Twitter. Zero, except friends who will not mistake my saying something. And so that way, YouTube has helped me to stay away from anonymous people, stay away from all that negativity. It has helped.
And you've been active on Chennai Investors Association also for a very long period of
No,
time.
it has grown significantly. It has outgrown all of us, and that's a very happy thing to say also.
So you have been also in terms of making investors more independent, learn. So has it helped you also personally doing that?
Yes, I also do financial planning today. So I set a target for myself to create a private portfolio in 2017, achieved in 2022. Now I'm setting myself a target to achieve a global stocks portfolio in the next 5 years of the same similar size. I set myself a target to achieve a realty portfolio. I finished it. So what I did for others, finally I learned to do for myself also. Earlier I was not doing all this. So I've done a lot of those things. Now I'm thinking that over the next 3 years I'll build a micro small cap portfolio also. Uh, one by one, slowly adding ideas. It'll take 2-3 years for me because I don't want to rush. I want to wait out this phase of politics and all the uncertainties. And hopefully during that phase, I will be able to build. The capital will come from one of these cyclicals where I make the money. I just set it aside and slowly again have fun. I enjoy my work more than the returns and all this math. And only when I enjoyed, I made better returns. That is also a corollary to that. I am not performed very well as an investor when I tried to perform very well as an investor. I performed very well as an investor when I enjoyed my investing. And whenever it became an obligation to perform, I didn't. I neither enjoyed nor performed. So I don't want that thought process to ever come again.
Yeah, this punchline can become a snippet for a podcast. Very well said.
No, it's a fact. Whatever I am telling you is what we would speak in private. I'm just saying the same thing because there is nothing to hide. Because you are not worried about how much return you are making, how much you make more than others, or anything like that. You want to be more rehearsed and more patient in your pursuit, and you want to improve your craft. So all these are connected, right? Only if you are all this, you can improve your craft. And When you improve your craft, your returns also reflect that. It's a aesthetic that shows. So it's a continuous learning and it's a continuous process of personal change and improvement. At every stage, you have to become a better person in what you do, not necessarily a smarter person. You become a better person in what you do, then you go to a higher stage. And again, you have to learn because at that stage, what you were 5 years back is not enough. You are insufficient for your own needs, actually. This happens. I've noticed that in my life and it's continuously happening. So at this stage, you again learn and you become up to speed to what you need to be. Now, only changes we are trying to be up to speed before itself because you know it's coming, right? And you are managing other people's aspirations, their goals, their dreams. So you should be even more prepared. So that way, last 5 years have been very good for me, 18 to 23, because the level of preparation we are doing now is cultural and it's constant. We are continuously preparing. So that is how we are able to do slightly better than what people expect. Otherwise, it would have been difficult. So we all make this huge issue of outperforming, active, all these things. I think the quest of all these things is internal. It's within you. It's within your team. It's within your ecosystem. It's within your circle, and not something outside. It's not something which you project. If it happens inside, it will show up. Otherwise, it won't show up. And you have to continuously work to make it happen. Uh, I think it is possible if you enjoy it. Otherwise, you are not going to perform. If you see all these guys who made a grandstand of performance earlier, either as individual investors or as professional mutual fund managers or as PMS managers, once they grandstand, they stop enjoying what they do. It becomes a onerous task. Okay. After a while, it becomes a misery answering. And then it's a downward spiral. I've already spent 33 years and generally I avoided that spiral most of the time. So that has to continue for a long time. When you see today, as we speak, 99 and 96-year-old fiduciary investors talking to us, I think we are nowhere near. It's such a long period where people invest. So we need to prepare ourselves for much longer periods of doing the same thing, hopefully longer than what is expected of us and what we think we can do. So it's a difficult thing. It's not easy, and I acknowledge that. And once you do it for others as well as yourself, you must do it the same way for both.
So I'll have one question to end it up. Say, a lot of people want to be full-time investors, and you are someone who's been investing full-time only, but has had multiple things which take away time. So what do you suggest to people why they should be also building stuff apart from being purely an investor?
We all talk about multidisciplinary learning, about how experiences, help you become better at different things. If you have to get experiences, then you have to work in different areas. Only when you work in different areas, you get different experiences of how things work, what will play out correctly, what won't play out, how to anticipate the future, how to anticipate problems. All these things cannot come if you're a full-time investor. It will happen only if you do a lot of things. And when you do a lot of things, you learn and you learn to cross-fertilize your experiences also. And I think it is that cross-fertilization which gives you a lot of ideas. In fact, many of the things which have given me large sums of money happened because of that experience in another place leading to income in the stock market. So you have to really pursue many things. I think having multiple interests and having a full-time anchored profession is very, very important. Investing cannot be a profession. I'm convinced about that. That's what I was taught, and that's what I also constantly mention, because I see a lot of people who think it is easy to make money in stock market. Therefore, you can give up your profession to come to stock market. I was stopped from thinking that on the day I came to stock market, and rightly so. In 92 also, I was stopped from thinking that before Ashok Mehta. And I was encouraged to study equity and all these things structurally only so that I don't get carried away by the feeling that making money in stock market is easy. So I think that the full-time investor always starts thinking that he is smarter than those who run businesses. He is smarter than those who provide services. He is smarter than those who practice professions, and that he can earn more money than everybody else. That belief itself is the most dangerous thing one can invite into one's life. If you should not invite that, you should not be a full-time investor.
Interesting perspective. So people can actually think of how it is looked at multidisciplinary, need not be just by reading. It has to be by actual experiences. Great. So any parting words you would like to have for, say, we've gone through this cycle of a lot of people, those who have come into the markets, thanks to COVID, thanks to having the time. What would you say those who have, or those who somebody who's a 20-year-old, 25-year-old, from your 30 years of experience, what they should be doing over the next 2-3 years? Suppose somebody has spent, say, 1 to 5 years in the markets, very interested. What should they be doing over the next 3 years?
Firstly, I am convinced that their next 30 years is going to be better than my last 30. I am very convinced about that. So, being an investor is a great thing for them to pursue. They should invest, and they should not be driven by recency. They should think beyond 5-10 years and do things which they can sustainably do for a very long period of time. So, invest in companies which you can sustainably own for 5 years at least. If you at 25 years are able to buy a company which you can sustainably own for next 15 years, you are doing better than people like me. Which I think you should, given the opportunity before you. The world is changing, India is changing at a rate faster than the world, and India is catching up with the world. In that process, numerous new opportunities will unfold. So, use your age, your courage, your adventurous spirit to identify these opportunities, to understand them better, to grow your conviction sensibly in them, and to pursue them with your money. Then your next 10-20 years will be way better than the last 3 decades of liberalization. I think the best is definitely before you, and you should be enjoying the experience of being an investor and also capitalizing on the opportunity. Make it fun. That's all I would say.
That's a great way to end it. Make it fun and enjoy your.
Yeah, on that note, Sham, I would like to thank you for taking out the time and being so candid and honest and educational. This was wonderful. I personally had a great time.
Thank you, Manish and Naresh. Always a pleasure.
Same always. It's always fun to talk with you.
Thank you so much. Bye-bye. Cheers.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.